Imagine this. It's December 2026. Inflation is still dancing above the target line. Global tensions are refusing to calm down. Currencies are yo-yoing again. And central banks, well, they're doing what they always do, making everyone confused. Now, in this chaos, there's a big question shaking every investor's mind. Should I go heavy on gold and silver in 2026? Or is this hype overrated? And here's the crazy part. While most people are busy guessing, governments and central banks are quietly stacking more metals than they have in over 50 years. Why? Because historically, whenever the world looks unstable, gold and silver don't just survive, they shine the brightest. Even during economic crises like the 2008 recession or the early 2020 pandemic crash, precious metals have consistently outperformed many other asset classes. They act like a financial life jacket when other investments sink. So today, let's break everything down, without the drama. Should you be investing in gold and silver in 2026? Is this the right time, or is it too late? Let's get into it. Part 1. Why people are again rushing toward gold in 2026. Every few decades, gold becomes the hero asset. 2026 is looking like one of those years. Here's why. 1. Inflation is slowing, but not enough. Sure, numbers look better on paper, but basic stuff, food, fuel, electricity, still feels expensive. Investors know one thing. Inflation steals from your pocket quietly. Gold, on the other hand, it quietly protects your pocket. Even small fluctuations in inflation can erode savings over time. Owning gold is like giving your portfolio a protective shield against these unseen losses. 2. Global tensions are not cooling down. New alliances, uncertain elections, oil price shocks. Markets love stability, but stability is currently on vacation. And whenever uncertainty rises, gold demand spikes automatically. Analysts also point out that geopolitical risks often correlate with short-term gold rallies, meaning volatility can actually create opportunities for careful investors. 3. Central banks are buying like crazy. This is the biggest clue. When big investors panic, they sell. When central banks panic, they buy gold. And their buying activity in 2024 to 2026 is at a multi-decade high. They're preparing for something. Should you? Even if you don't match their buying power, understanding their moves can guide individual investors on timing and positioning. Part 2. Why silver might be the real underdog in 2026. Everybody talks about gold, but silver is like that underrated actor who suddenly becomes a superstar. Here's why silver could explode in 2026. 1. Industrial demand is going wild. Electric vehicles, solar panels, medical tech, batteries. All these industries are scaling up like crazy. And guess which metal they need in huge quantities? Silver. In fact, the growing push for green energy alone could drive unprecedented demand, giving silver a practical value beyond being just a hedge. 2. Silver is still undervalued. Historically, the gold-to-silver ratio is way off balance. Silver is cheap, too cheap. This means its upside potential is bigger. Some experts even suggest that if the ratio corrects to historical norms, silver prices could surge dramatically over the next few years. 3. Retail investors are eyeing it again. Smaller investors prefer silver because it's affordable, and whenever retail participation rises, the price movement becomes bigger and faster. Part 3. Should you invest in 2026? Let's talk strategy. Now we come to the real question. You're not a billionaire. You're not a central bank. You just want to make safe, smart money moves. So does gold and silver make sense for you in 2026? 1. If you want safety, gold is your guy. Gold is not about profit. Gold is about protection. Gold won't double your money overnight, but it protects your wealth from inflation, currency drops, and global drama. Think of it as a long-term safety net for your financial future, ready to absorb shocks others cannot. 2. If you want high growth potential, silver has more upside. Silver is more volatile. It moves faster, both up and down. But in 2026, because of industrial growth, silver could outperform gold in percentage terms. 3. If you want balance, mix both. Most smart investors use something like 70% gold plus 30% silver or 60% gold plus 40% silver. This gives stability and upside. Not financial advice, just common sense strategy. 4. Is 2026 too late to enter? This is the question that scares everyone. If prices already went up, am I buying at the top? Let's clear this. Gold rarely crashes hard. It corrects, but it doesn't collapse. Because gold isn't a hype asset, its demand is built into the global financial system. Silver is more unpredictable, but even silver corrections usually recover because industry needs it. And historically, buying gold or silver during global uncertainty is not too late. It's actually the phase where people who waited regret waiting. So no, 2026 isn't too late. Just be smart with timing and don't invest everything at once. Part 5. How much should you invest? Most financial planners around the world recommend 5% to 20% of your portfolio in gold and silver. Why not more? Because metals don't produce cash flow. They are protection, not a business. Why at least some? Because when the world goes crazy, metals act as a financial seatbelt. If you're conservative, go near 5 to 10%. If you're expecting big global drama, go closer to 15 to 20%. Part 6. Physical versus digital. What should you choose? 2026 investors have multiple options. Choose based on your style. A. Physical gold and silver. Full control. No third-party risk. Good for long-term holding. Requires storage. Sometimes higher premiums. B. Digital gold. ETFs. Easy to buy and sell. No storage issues. Great for beginners. Depends on platform reliability. Doesn't give the real bar in hand feeling. Part 7. Who should avoid investing in gold and silver? Surprisingly, not everyone should buy metals. Avoid if you want fast profits. You're only investing because of hype. Your emergency fund is not ready. You're using borrowed money. Gold and silver are stability tools, not gambling tickets. Patience and strategy are essential for metals to truly pay off. Part 8. Final verdict. Should you invest in 2026? Let's wrap this with clarity. 2026 is shaping up to be a year where traditional safe assets become powerful again. If you're looking for stability, inflation protection, safe long-term storage of wealth, gold is a strong pick. If you're looking for higher potential returns, exposure to industrial growth, a metal that's still undervalued, silver might outperform. And if you want the smartest move, a well-balanced mix of both. Because no matter how advanced the world gets, when everything else fails, gold and silver have never stopped shining. Invest wisely, stay informed, and let these timeless metals do their job.